Our next guest had a stake in Facebook, but has recently sold it. Thomas Heilmann is a co-founder of German advertising agency Schultz & Friends, and he now says that the valuation of Facebook is, quote, crazy. He joins us now live from Berlin. So, Thomas, did you sell your stake before or after this $50 billion valuation?
Just before, but it was already, there was some rumor that this is going to happen.
Okay, so without going into too many specifics here, but I would bet that you made a healthy profit on that stake. It was less than 1% of the company that you owned.
I only owned some tens of percentages, so it's a small amount, and I made some profit. Yeah, it's easy to calculate.
Yeah, I would imagine. So when you talk about this valuation being crazy, why do you think that $50 billion is too much? What's the real value of Facebook for you?
I mean, the fundamental value is some multiple of the revenue, but certainly not 50 or something below.
So like $2 billion in revenue,
what kind of development. I don't have an official number. No one has an official number, so I don't have it either. But something between 1 and 2 billion seems to be right, and therefore you can imagine how much growth Facebook needs in revenue in order to get this valuation, or to earn that valuation. And I do think the valuation is too high, and therefore I sold.
Took some healthy profits there. So do you think, though, that this is, while you say it's a wrong-headed valuation, is this the peak? Or do you think that the kind of worth that Goldman Sachs and Russian investors are seeing is just a different way of valuing a company beyond the fundamentals of revenue?
Yes, I mean, the valuation is not on a calculation. The valuation is the demand and the offer, and there is more demand than offer, therefore the prices are high. And I don't even say that it might go a little higher from now on. And you also could say that Goldman Sachs will probably make a lot of money on it because they get provisions from those people who invest. They probably will do the IPO, which makes them money also. So that makes sense from a Goldman Sachs perspective, but from a private investor segment, I would say I made a lot of profit. I may not have chosen the absolute peak, but the relative peak, I'm close to it, I'm sure.
Now, there was a lot of talk yesterday, in particular with this valuation, about some of the opportunities Goldman was also going to offer its high net worth customers, and say for $2 million you can get in and own a piece of Facebook through a special purpose vehicle. Is $2 million too high a price to own a portion of this company?
I would say the valuation is too high. I'm not a Goldman high network client, so I cannot buy at this valuation, and I would not, even if I could.
It's not a fair deal for an investor, you don't think?
I wouldn't call it a fair deal, and I wouldn't recommend it. Although Facebook is a great company with a great business model, but it's just valued at a too high a price, a too high price.
Do you have a tech company that you do like right now, that you see real value in going forward?
I'm not invested in any public company where I can say I would recommend it. I have some private holdings, and I just invested the last week in Paper.ly, which is a small company, and may have a development with the valuation is, as you can imagine, completely different.